Hello everyone, welcome back to our weekly market analysis video with me, Frankie, your market analyst at Markets4U. In today's video, we'll be looking at the key economic events and data releases from September 1st to September 5th, 2025. I've already set up my screen to display the economic calendar from the traders room at Markets4U. I've set the dates from September 1st to September 5th, covering this week's important events in GMT. Please remember to adjust to your respective time zones. Let's dive into this week's events. Monday starts with Australian building permits and Chinese Caixin Manufacturing PMI, followed by Eurozone unemployment rate figures. Tuesday brings Swiss retail sales data, Eurozone inflation figures including core inflation rate, and US ISM Manufacturing PMI. Wednesday features Australian GDP data, Chinese Caixin Services PMI, Eurozone PPI figures, and US JOLTS job openings with factory orders. Thursday includes Australian household spending and balance of trade data, Swiss inflation and unemployment figures, Eurozone retail sales, US ADP employment change, initial jobless claims, Canadian balance of trade, and US ISM Services PMI with Japanese household spending data. Friday concludes with the most important releases of the week: German factory orders, and the highly anticipated US non-farm payrolls along with Canadian employment figures. This week's key market-moving events will be the US non-farm payrolls on Friday and the Canadian employment data on the same day. These releases should create significant opportunities across major pairs. Now, let's go to the technical analysis. This week, we'll focus on the US dollar against the Canadian dollar and the euro against the US dollar, as both instruments face significant employment and economic data releases. Let's start with the US dollar against the Canadian dollar. Looking at the daily chart, the US dollar against the Canadian dollar pair is currently trading around 1.3749, moving lower and now below the 20-day moving average. The pair faces crucial Canadian employment data on Friday, including employment change and unemployment rate figures, which could provide significant direction for the Canadian dollar. Looking at important levels, the US dollar against the Canadian dollar has support at 1.3655 and 1.3567, while resistance can be found at 1.3789 and 1.3883. The price is now trading below the 20-day moving average, which is acting as dynamic resistance. The stochastic oscillator is entering the oversold area, suggesting the pair may be due for a potential bounce, though the overall trend has turned bearish. The 1.3655 support level will be particularly important to watch during Friday's Canadian employment release, as strong employment data could drive the pair lower toward the next support at 1.3567. Now, let's turn to the euro against the US dollar. On the daily chart, the euro-dollar pair is currently trading around 1.1686, consolidating and now moving slightly above the 20-day moving average after consolidating around the moving average for several weeks. The pair faces several high-impact releases this week, including Eurozone inflation data on Tuesday and US non-farm payrolls on Friday. Looking at key levels, the euro against the US dollar has support at 1.1588 and 1.1469, while resistance stands at 1.1778 and 1.1896. The price is currently moving slightly above the 20-day moving average, which is acting as dynamic support. The stochastic oscillator is in the middle with potential of moving higher, suggesting the consolidation phase may be ending with upward momentum building. Friday's US employment data will be the most significant event for this pair, as it could influence Federal Reserve policy expectations. The 1.1778 resistance level will be crucial to watch, as weak US employment data could drive the pair toward the higher resistance at 1.1896. Both instruments could see considerable volatility this week. Traders should be particularly cautious during Friday's employment releases from both the US and Canada, as these events can cause sudden spikes in volatility and potential gap risks. Remember, always manage your risk carefully and never invest more than you can afford to lose. That's it for this week's analysis. See you in the next video.